This is Rod Kusin and Spooman for Risk on August 5th, 2011, all times on the chart, Central Standard Time. The video today will be discussing the use of our auto stop feature in conjunction with our hold pattern setting. And what we've done here is created a very simple strategy that for all practical purposes I would never use. It would be a losing strategy, alright? But I wanted to see how the auto stop feature that we created would handle trades being taken using a strategy that is pretty much guaranteed to lose you money. Now let me first describe the strategy itself, because it's really simple, and then I'll talk about the individual features. Now basically what this strategy is, if you look at this 300 tick bar volume indicator here, this is what's driving the trades. Now in principle, the concept is this: if the bars are green, you're long. If they're red, you're short. Okay? So for example, and whenever you see an arrow here, you have to look at the previous bar. The previous bar drives the trade. So this bar drove the long trade, but the very next bar is red, so that drives the short trade over here. Okay, so each of these bars is connected to each of the trades is connected to the color of the bars. Now there's one other factor involved here, and that is the ES500 Z-score. If the ES500 Z-score is yellow or below 0, it will hold a short trade. If it's green above 0, it will hold a long trade. Now I'll describe more about that as we go into this. But basically this is a very simple strategy, but the strategy frankly doesn't make any sense. I would never use this. It wouldn't work. Over time it just wouldn't work. However, because of this hold trade condition, along with the auto stop feature, we're able to do pretty well. I'm going to show you the trade results after we talk about the strategy. You're not going to believe this. Alright, so let me walk you through this. So we have this short trade here, and the market moves against us. Now why aren't we getting stopped? Oh, and by the way, before I go into this detail, there are no protective stops. There's no stop in here other than the auto stop feature, which I'll describe in a second. There's no break-even stops, there's no profit targets, there's nothing. The only thing that's driving the trades is either the trade signal itself or the auto stop feature. That's the only and the hold trade condition also can get us out of a trade, but it won't get us into a trade. So let me just go through this nice and slow so you understand. I'm going to take this trade for trade. Alright, so this long trade gets immediately reversed by the short trade, and the market moves against us. Now, we are not going to be stopped out of this trade. All right, we're not going to be stopped out of this trade unless this z-score indicator here goes positive, and the trade never went positive here. It's always yellow. So that's why, first of all, even though the market moved against us, the auto stop feature did not take us out of the trade. On the other hand, this long trade that takes place at the top of this move gets auto stopped because the z-score here is below 0. That's part of the formula. The other part of the formula is that the bars of the volume on this 300 have to be negative. They have to be red. All right. So here's this long trade. Z-score is below 0. Volume bars are red, and therefore we get stopped out. That's the auto stop feature. So once again, if the trade is long, we're going to be auto stopped if the z-score drops below 0 and the color of the bars are red. Conversely, we'll get auto stopped on a short trade if the z-score is above 0 and the volume bars are green. So that's the auto stop feature. Very simple. So as you can see, these first few trades, they don't make any money. They lose money. Then we get this long trade here. Now, the long trade is based upon these volume bars being green. They stay green, all right, as the market moves up. And then when the 500 z-score goes above the 0 line, we're now in a hold pattern. This long trade will be held. It'll continue to be held so long as the z-score is above the 0 line. So you don't see any trades after this. So let me move forward. We're in a hold pattern as of right here. The hold trade, the long trade is exited when the z-score drops below the 0 line, which happens right here. Now we exit. We also wind up getting into a short trade. Now remember, in order to get out of that trade, based on the auto stop arrangement, this z-score has to be above 0 and the bars have to be green. Well, that occurs right here, which also initiates a long trade. So instead of using the auto stop feature, if the auto stop takes place on the same bar that a trade takes place, we're just going to show you the trade. So that's what happens here. Now we move forward. We're in a long trade again. We're above the 0 line on the 500 z-score, so we're automatically in a hold pattern. So we do really quite well on that trade. Then we drop below the 0 line. The trade exits. Okay, trade exits here, and then we get another long trade. We get a long trade because these volume bars are green, all right, and they remain green even though the 300 z-score is falling. So we're not getting stopped out here. Instead, we get a short trade. So we've lost money on that. There's no question about that, but we've lost money. All right, now this short trade here gets auto-stopped here. All right, why? We shorted the market at 11.92. Look at the box there at the bottom. We shorted it at 11.92. It auto-stops and covers at 11.92. Why? Because this z-score is above 0 and the bars are green. Let's look at the next auto-stop. Here we have a long trade at 11.91.75. It gets auto-stopped at 11.91.50. Why? Because the z-score drops below 0 and the bars are red. Okay? Here's another trade, 11.91.25 shorts, gets auto-stopped at 11.92. 11.91.25 auto-stopped at 11.92. 3-tick loss. Long trade here, 93.75, auto-stopped at 92.75, 1-point loss. Okay, so rather than having a fixed protective stop, at whether it be 4 ticks or 5 ticks or 6 ticks or whatever the case is, the auto stop is a technical stop. It doesn't stop you out at a specific number of ticks. That will vary depending upon the circumstances. Let's carry this through a little further. Now this nice long trade gets exited based upon a hold trade exit where the z-score has dropped below the 0 line. So it was entered at 94.75, exits at 96, and then we're back into a long trade again. That trade finally gets into a hold pattern as this moves above the 0 line. 95.75 exits at, what was that? 95.75 exits at 97.50, where we would normally have gotten out of that trade. Normally it would just be a hold trade exit, but we also went short. Okay, short at 97.50, and the hold trade exits at 98.75, then goes long. Okay. All right, so on and on we go. Now here's the auto stop. Short at 1200, auto stops at 1225. So even though we in fact, let's get it there, 1200 runs up to 1201.75, we haven't exited. So we had a little bit of a drawdown there, but it did not exit because auto stop didn't take us out of the trade until right here. So there can be a bigger drawdown, and yet the auto stop does not exit the trade until the technical reason for moving out of it. Now you'll notice that the z-score momentarily went above the 0 line right here, but the bars were red. The bars have to be above the zero line in green to auto stop, which is what occurs here. So this auto stop arrangement, it's pretty interesting. Pretty interesting. Be very interested to play around with this in the days ahead. Anyway, we started running this in the simulated mode in the overnight market. There's our first, I think that's our first trades. Yeah, first trades happen in the overnight market right in here just after midnight, and they run through the end of the day. And as you can see, you know, nothing I've said here in terms of a strategy makes any real huge amount of sense. By itself, it would probably turn out to be a losing trade, a losing strategy. It's very, very simplistic. There's nothing technically advantageous about this kind of a strategy. But with the use of the auto stop feature, and mind you, also the hold trade feature, which maintains a winning position, usually, for a lot longer than you might normally hold it, but then gets you out, hopefully, at a profit. The strategy performance report, I mean, the number of trades here is ridiculous. I'd never trade this. 240 trades. Yeah, that's ridiculous. But what's kind of interesting about the fact that it's only trading 2 contracts is the cotton picking thing, you know, makes a ton of money. What do I say about that? I say, well, maybe we're on to something. So if a losing strategy can be turned into a winning strategy with the use of the auto stop feature and the hold trade feature, what would a winning strategy look like? Well, I haven't had time to apply the auto stop feature to our standard winning strategies. I just haven't had time. I've been working on some other things. But I just happened to take a look at this workspace, and I said, that's pretty interesting. That's pretty interesting. So it's all coded up. It's obviously working. It's working the way I expected it to, but it's working a whole lot better than I figured it would. So that's kind of nice. So next week, if you've been following us through the week, we're working on this hold trade feature of the strategy. We want it to work with our protective stops, with our profit targets, and so on. And we haven't got it quite coded correctly in that respect. It's just been a misunderstanding between myself and my programmer, Stu Alkarovsky. A little plug in for Stu, great programmer. If you're looking for a strategy, this man knows how to program anything that you can articulate. If you've got clarity of thought and you know how to express what it is you want, he can do it. He can do, I think, just about anything. And I've been working with him now for, you know, better part of a decade, and Stu's a great guy. He's well worth the money. But anyway, I didn't communicate properly my objectives to him over the last day, and so we didn't quite code up our hold feature the way I wanted it done, because I just didn't tell him. But here's how the strategy looks to the user. Here's our auto stop strings. This is our hold trade switch. This is our trade signal switch. In this case, use the 300 tick bar. This tells us where the hold trade should activate and exit. And other than that, there's no profit targets here. There's no stops in the strategy. There's nothing set up that way at all. And so there you have it. So we invite you to come and take a demo. As we continue to mention this, you take a demo with us, and you will learn things you have not been exposed to before. If you decide never to do business with us, I can guarantee you one thing: you will walk away with ideas that you can incorporate into your own style of trading, and you will be a better trader. Guarantee it. You'll be a more profitable trader by incorporating some of the ideas that we use in our strategy, certain things that we watch and make use of every day. And you'll walk away being a better trader for taking the time to do a demo. Occasionally we give away some pretty valuable free information that oftentimes traders have to go to seminars to and spend thousands of dollars to get this information. We'll give it to you for free. And that's partly why our strategy isn't cheap, because we've given away a lot of free information to begin with. So anyway, it's the end of a Friday. Very interesting week. And it's time to relax. So I'm going to conclude on this note that we hope you come and take a look at what we're doing and give us a call. And I'm Rod Kusanen, Spooman for Risk, and you have a good weekend.